Welcome to another episode of Questions, Comments, and Concerns, where we unpack questions that we get commonly from client meetings and phone calls. We try to unpack it in our 5-minute videos. And so today, I'm Greg here with Thomas, and today we're talking about long-term care insurance. And Thomas, with healthcare increasing in costs so dramatically in nursing homes and just general healthcare, this has become a topic of concern. And how can our clients provide for their healthcare concerns moving forward in case something happens that they need extra help? So we're going to try to talk a little bit about it, go through what long-term care insurance is, and then we can start talking about who it's appropriate for.
Yeah, so it's important. First, I want to draw the distinction between long-term care and long-term disability insurance. And so long-term care insurance is typically something you're going to be using at the end of life, whenever you are, you're in a nursing home or healthcare. And so that's essentially what long-term care insurance is. And so it's care in a nursing home, assisted living, as well as home that will be care that be provided in your home. And so it's two important things to really be aware of, though. The long-term care insurance is only going to kick in after you're certified by a physician to be eligible for long-term care. And there's some stipulations around that. Secondly, Medicare, which is insurance that you go on once you're 65 or older, Medicare is not a substitute or a replacement for long-term care. Medicare only covers short stays in nursing homes after like a surgery or something like that.
No, great point. So, and there's some arguments as to who would be best suited for long-term care insurance and when you start purchasing that. At what age would you purchase it? Maybe there's a net worth qualification, whether you could possibly be self-insured, right? Talk to us a little bit about who is a candidate for long-term care.
Yeah, so we look at the sweet spot really being your late 50s, early 60s. That's the time of life when you're kind of really looking at, hey, what's this second half of my life going to look like? But also you might have the assets to be able to purchase long-term care, because we're going to talk about in a minute the type of care that we recommend that people buy. You got to have some assets to be able to do that. And so, but the other part of it is, as you mentioned, am I self-insured? Higher net worth people there may not be a need for it, but you want to look at things like your family history, your own personal health history. Am I going to even be able to qualify for it? So those are a few factors you want to look at.
Yeah, it's a good point. There are different products out there now. The product that my mom and dad purchased for long-term care isn't even available any longer. So now but these insurance companies have gotten pretty creative, and I think in a good way, with even backing it up with life insurance too. So talk to us a little bit about, what types of long-term care we recommend here for our clients and what's most appropriate for them in that terms.
Yeah, so like you mentioned, there are a few different types out there. The traditional long-term care insurance that you mentioned for your parents, last I checked, I think there was one provider that provided that old school long-term care insurance where it's, you pay for it, you pay a premium, and if you don't use it, you end up losing it, essentially like auto insurance, right? You just pay your premium and they're hoping that you don't use it. What we recommend here is really more of a hybrid approach, and it's the term. There's a few different ways to call it. That's called. We use the term asset-based care, and that's essentially where you have a one-time premium, where you're paying an insurance company a one-time premium somewhere between, say, $50,000 and $150,000. You're paying that premium to the insurance company, and they are then providing you an immediate long-term care bucket or pool of money to have access to. And the longer you go before using those benefits, the higher that benefit grows. And it's typically somewhere between 2 to 4 times that. So you put in $50,000, you may have access to, down the road, $200,000 in long-term care. But why we really like it is the optionality of it. Is that most of the products have a couple different benefits where if you don't use the product, there's a death benefit available to a beneficiary. And if you decide down the road that you want to no longer have the product, you can basically get your premium returned back to you less some fees. And so we like the optionality of that.
I do too. I like that it has the ability of it keeping it into the estate, and the heirs are guaranteed to get the money back that they put in. I really like that optionality also, Thomas. Look, we're only scratching the surface of long-term care here. So we'd invite our clients to call and ask more questions. there's a lot of things here to think about, and long-term care doesn't apply to everybody. And so give us a call here at Avidian. We'll help you out.